If you want to get rich faster dividend growth investing, you need to find dividend growth ETFs that offer growth, dividends, and on top of that, massive dividend growth, which means your dividends are going to pay you more and more over time. Now, in this video, we're going to go over what I think are the top 3 dividend growth ETFs across the entire market that offer investors all that and more. And because of that simple reason, these ETFs have the potential to make investors rich a lot faster. That's if they're willing to buy these assets and hold on to them long term. Now stick around, drop a like down below, and let's get into all 3 of these different ETFs. I just finished my brand new dividend investing ebook where I share exactly how I went from 0 to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first dividend growth ETF that offers everything for the most part that every dividend growth investor is looking for and more is VIG, or the Vanguard Dividend Appreciation Index Fund, and this ETF has performed amazing over the long term. For more context, this ETF was trading around $49 per share back in May, and as of right now, you can see it's near all-time highs at around $171 per share, and that's not even including dividends. Now, VIG also has a super cheap expense ratio of just 0.06%, which means it's not going to cost you an arm and a leg to hold long term. Now, the main culprit for VIG's explosive performance is the holding breakdown in the top 10 stocks. These names are very familiar and for good reason, but first look into the sectors. We have technology being the leader at around 24% of the ETF. Now, this is going to give the ETF a little bit higher beta, which means when the market rips, it's really going to grow, but when the market falls, you might see a little bit more of a decline compared to some of the other options we're going to be going through in this video. But the top sectors are things like technology. We have financials at 18%, healthcare at 14%, then next industrials, consumer defensives, etc., etc. VIG has around 318 different holdings though, and the top 10 names being things like Microsoft, love it, Apple, amazing. Things like JP Morgan, United Healthcare, Broadcom, ExxonMobil, Visa, Johnson & Johnson, MasterCard, the Home Depot, and others. Now, it's really hard to find an ETF that offers a top 10 holding list better than these, and if you know any, drop them in the comments down below. But what's also awesome about VIG is it offers a pretty decent starting dividend yield considering this ETF. You're not really buying it to get rich off the dividend, you're mostly buying it to get rich off the price return, at least partially. Although VIG is still offering around 1.88% as far as trailing 12 month on the dividend yield, and some decent dividend growth, trailing 12 month 8%, 11% the 3-year, we have 9% the 5-year, and 8.7% the 10-year. Now, I said earlier that all 3 of these different ETFs are going to be offering every single thing that a dividend growth investor looks for. Those things being price return, a cheap expense ratio, a rock solid basket of holdings, a decent starting dividend yield, and substantial dividend growth, which VIG has every single one of these. And it's also important to note that just as of recently, VIG paid the biggest dividend of all time at 92 cents per share. The 12-month prior dividend was 87 cents, indicating substantial dividend growth, which investors of VIG absolutely love. The next super high quality dividend growth ETF is none other than ticker symbol DGRO, or iShares Core Dividend Growth ETF. Now, DGRO, just like VIG, offers price return, offers a substantial positive price return of around 112%, and this is since around 2014. Now, DGRO has a 0.08% expense ratio, so it is a little bit more expensive than that of VIG, but relatively speaking, still pretty cheap. DGRO's top sectors and top 10 holdings are also very impressive. The top breakdown is things like financial, technology, healthcare, industrial, and consumer defensive. And the top 10 stocks are also very familiar, lots of same names that we saw in VIG. We have things like Microsoft, JP Morgan, Johnson & Johnson, Broadcom, abbvie, ExxonMobil, Apple, Chevron, the Home Depot, and Procter & Gamble. Now, just like VIG, there are hundreds of different holdings inside of DGRO, which is going to make a dream scenario for a long-term dividend growth investor, and I'm pretty much right here describing myself. Now, DGRO's trailing 12-month dividend yield is 2.45%, so higher than that of VIG, and also offers some substantial dividend growth. And as you can see over time, DGRO has also paid more and more to investors quarter after quarter. Now, the last super high quality dividend growth ETF is none other than my absolute favorite. You guessed it, ticker symbol SCHD, or the Schwab US Dividend Equity ETF. Now, SCHD is up around 191% on the max time frame, so it definitely has grown in price over time substantially. SCHD has a 0.06% expense ratio, but unlike the others, SCHD's top 10 holdings, in my opinion at least, are not as favorable as that of DGRO or VIG. Still some super solid names in here, but I'm not going to lie, there are some names in here that I'm not the biggest fan of. Now, the breakdown for SCHD's holdings though are things like industrials, healthcare, and financials being the biggest, then technology, consumer defensive, etc., etc. The top 10 holdings being things like Broadcom, we have abbvie, We have Merrick, we have Home Depot, Amgen, Texas Instrument, Cisco, Coca-Cola, Verizon, PepsiCo, and others. Now, even though SCHD doesn't necessarily have the flashiest top 10 stocks, within the ETF, this ETF still has performed very well over time, and I'm going to show you exactly how well in a second. Not to mention, SCHD has a trailing 12-month dividend yield of 3.5%, which is much higher than that of DGRO and VIG. So for those investors out there like myself that are definitely chasing cash flow from day one, you are going to be getting the biggest dividends most likely by buying into SCHD at this point. Not to mention, SCHD's dividend growth has been substantial, around 8 to 10% more or less over multiple timeframes. For more context, around 10 years ago, SCHD was paying around 25 cents on a quarterly basis, and just as of recently, almost 75 cents per quarter. So now that we went over VIG, we went over ticker symbol DGRO, and of course SCHD, I want to prove to you guys that at least over multiple timeframes, pretty much any single one of these ETFs has been a massive wealth generator for investors. Now on the 1 year time frame, VIG is up the most because of course the holding breakdown, up almost 16%, and side note, this is with dividends included. DGRO is up around 12% and SCHD almost 6%. Over the last 3 years though, SCHD is up 26.3%, DGRO almost 26%, and VIG over 29%. But on the 5 year time frame, it's pretty much all the same more or less, with VIG being in number 1 at 85.57% total return. This is over a 5 year time frame. Number 2, SCHD coming in with 84.9% and DGRO at 75.05%. Now what's crazy is that no matter which one of these ETFs an investor would have purchased, say 5 years ago, they would have almost doubled their money just by buying and holding. And again, of course, it's important to note that past performance does not indicate future performance, so we don't know exactly what things are going to look like 5 years from now. We don't know if SCHD is going to start to drop. We, of course, don't know if VIG is not going to perform as well, etc., etc. But I do know one thing that I'm looking to do in my dividend growth portfolio from here on out, and that's to spend the majority of my cash balance ongoingly on super high quality dividend growth ETFs that have not only offered historically at least massive price return, but dividends, dividend growth, and all have a overall super high quality basket of holdings. But when it comes to long-term dividend growth investing, and in the context of VIG, DGRO, and SCHD, I want to hear from you guys down below in the comments. If you were, for whatever reason, only able to buy one of these, only able to buy one, which one would it be and why? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.